friends, this is Natalia too. I'm a CPA and a business coach who works with visionary entrepreneurs and saves them money on taxes, as well as helps them to build more profitable, successful businesses so they can have the lifestyle they always dream of having. I'm also an author. I wrote a book. It's called The Wealthy Intentional Entrepreneur, How to Build Financial Wealth One Step at a Time, and it's available on Amazon. It's full of very useful information if you're running a business. So in this video, I would like to talk about reasons why you want to run your business as an S corporation. Basically, there are three main reasons. The very first one is tax savings. So because the S corporation, the net income from S corporation is not subject to self-employment tax, which is 15.3% tax, and therefore there's a tax savings from the running the business as an S corporation. So for example, let's say you have a business as an LLC, either a sole proprietorship or LLC. So, and let's say your business income is about $100,000. So when you don't, if you just run your business on Schedule C, all your net income is going to be subject to self-employment tax, which is 15.3% tax. So after the calculation comes to about $14,330. There's some minor calculations, but pretty much it's about $14,330. And if you run your business as an S corporation, first you need to have a reasonable salary, which is about 35 to 40% of your net income. Let's say we took that $35,000, and then you have the same net income minus the W-2 income, and then minus the employer portion of taxes, and therefore you comes to the net income of about $62,000. So the self-employment tax now is roughly about $5,356 versus $14,000. So on $100,000, you will save about $8,000 on self-employment tax. So obviously, it makes sense for some business owners, for majority business owners, to run their business as an S corporation. And of course, the benefits will be higher as your net income increases. So a lot of people asking, what if I run my business as a C Corp? Well, C corporation is beneficial for large companies, or if you have a significant medical expenses, because the medical expenses and the life insurance of the shareholders tax deductible expense for a C corporation. 95% of the time, it's not the case. For small business owners, S corporation is the most beneficial business entity, provided you're making money. So with a C corporation, net income, the net income is subject to 21% tax rate right now. It used to be 35 if it's a personal service company. Now it's 21% after the new tax law. But then when you take the money from the company, they're also subject to qualified dividend rate. So that means, let's say maybe it's a 0%, but maybe it's a 20%. Let's say it's about 15%. So plus, don't forget that you will be paying a state income tax, right? And therefore, the net income from the C corporation, very possible might be subject to 41% of income tax. Again, S corporation, in my opinion, as a CPA, is most beneficial business entity to run your business. So the second main reason is the audit risk, because technically Schedule C Schedule C's are subject to audits about 10 times more than S corporation, and this is just a plain statistics, but that's true. So it's about 10 times less audit risk. And sometimes, when business owners come to me and they say, well, I don't make money, I'm actually losing money right now. I'm still at the beginning stage of building my business, and I lost $30,000-$40,000, and this is the second year. So I'm a little bit concerned about IRS audit risk. Not so much about tax savings, because I haven't made money yet. Well, so it's possible that I would tell them, yes, perhaps we should convert your LLC into an S corporation so we can at least minimize the audit risk. There's no doubt that you keep the records, but at the same time, you probably don't want to deal with the audits, right? And the third reason is it's very easy to operate the company, and it's also, if you decide to sell your company, and if the buyer buys the shares of your company, so you just sell the shares, and the capital, the gain from the capital from the sale of the S corporation will be subject to capital gain rate, again, it can be from 0 to a 20% rate, which is again most beneficial, and it's a very easy to sell a company. And selling stock, it's very beneficial for sellers. However, it's not beneficial for buyers. So when you decide to sell your company, there will probably be some discussion about what exactly do you want to sell to your potential buyer. So if you like the video, please subscribe to our channel. Please click like. We are Colorado Business CPA. We are a full service CPA firm. We provide packages for small business owners, and which includes payroll, accounting, bookkeeping, tax planning, tax preparation services, as well as coaching. So if you're looking for a new CPA, I hope you contact us. It's www.coloradobusinesscpa.com. Our number is 1-800-5040-CPA, 1-800-5040-272. Please subscribe to our channel and like the video. Thank you so much and have a great day. Bye.